Hey guys, this is a Forex price action trading course. This is lesson number 12, using H&S patterns to gauge the market bias. Okay, let's get going. Okay, here's a lesson overview. First, I'll be explaining how to gauge the market bias with legitimate H&S patterns, and then I'll go on to gauging the market bias with fake H&S patterns. So in these sections, I'll be explaining how to gauge the market bias depending on the H&S's situation. And then finally, I'll be explaining the basic paradigms that you have to understand in order to gauge the market bias with H&S patterns. Okay, gauging the market bias with legitimate H&S patterns. Alright, we'll start off with number 1. So we want to analyze for legitimacy. So we want to analyze the H&S for legitimacy using what we learned in lesson 8. Okay, so let's go ahead and do that. Alright, we'll be using this H&S pattern for this demonstration. Okay, let's go ahead and see if this H&S is legitimate. Alright, so first of all, we have parallel necklines, right? Because there's an equal distance between the two. So we cleared that criteria. Moreover, this top neckline is adjusted to this pivot right here. And this pivot is between the major neckline's pivot and the last correlating major pivot. So we clear criteria number 2. Moreover, this H&S pattern is roughly flat. Again, we're just going to draw a clock and make sure that the angle of the H&S is between 2 and 3 o'clock. In this case, it's about 2:45. So we cleared that criteria. And also, there's no breakout of the main neckline between this pivot right here and the entry level right here. So we cleared that. Now finally, we want to make sure the trend before this H&S is in the opposing direction, which will be long in this case. So again, we're going to just zoom all the way out. Then bring that H&S to the right side of the chart. Now since there are no higher highs on the left side of this H&S, that shows that the prior trend was long, and that in fact the prior trend was in the opposing direction. So we cleared that too. Okay, so using what we learned in lesson 8, we analyzed this H&S and learned that it was actually legitimate. Okay, let's go to number 2. Alright, number 2, discover height target. Using the distance between the head and the necklines of the H&S, project out a target level. Alright. Okay, so using the pivot high of the head, which is right here, and drawing a straight line down to the main neckline, that gives us the distance that we have to project in order to know the target level for this H&S pattern. So let's go ahead and do that. So roughly that distance will be around here. So this H&S's projected target level will be at this price level right here. Okay, let's go on to number 3. Okay, number 3, adds consistent strength. So until the H&S height target is reached, there is consistent added strength between the entry price level and the projected target's price level in the direction in which the H&S propels price. Okay, so the entry price level for H&S is right here at this pivot high. And like we drew earlier, that projected target level was at this price level right here. So since this H&S was in fact legitimate, from this entry price level all the way down to the projected target level, there will be consistent strength added down to every pivot that we measure the future strength of. Alright, so let's just go through an example here. So let's say we wanted to enter short this currency pair. So we measure the future strength down of this pivot right here. Now using what we learned in the last lesson, let's first use this trend line from this pivot to this pivot right here and see how much future strength this adds. So we'll go ahead and see how many touches there were on this trend line. There's 1, 2, 3, and 4. So let's say this trend line adds a future short strength of +5 for this pivot level right here. However, simultaneously, price is still in between the legitimate H&S pattern's entry level and projected target's price level. So since this H&S was legitimate, and since price is still in between this legitimate H&S's entry level and its projected target price level, we're going to actually add a plus 10 future short strength to this pivot also. So in total, this pivot's future short strength was actually plus 15 future short strength. Okay, let's go through one more example. Now let's say a little bit more time goes by and we want to enter a short at this pivot right here. So we're going to measure the future strength of this pivot right here. First, we'll use a trend line. So we'll draw one from this pivot to this pivot right here. And then we're going to count the touches on it. So there's 1, 2, 3, 4. So again, the future short strength of this pivot right here will be plus 5 future short strength. However, in this case, since price already reached the projected target price level, which was right here of this H&S, we are not going to add plus 10 future short strength to this pivot right here because price already reached its target price level. So to sum this up, you want to remember that the only price levels that this legitimate H&S will add future strength are the price levels from the entry point of the legitimate H&S to the price level of the projected target, which is this area right here. So any pivot that we measure the future short strength of in between these price levels, we're going to add a future short strength of plus 10. All right, so now let's talk about how to gauge the market bias with fake H&S patterns. Okay, next slide. Okay, gauging the market bias with fake H&S patterns. Okay, we'll go to number 1. We're going to analyze for legitimacy. Okay, in this case, we'll be using this H&S pattern right here. All right, so let's find what makes this H&S pattern a fake. All right, so first it has parallel trend lines because there's an equal distance. So that's cleared. The upper neckline is adjusted to a pivot in between the major neckline's pivot and its correlating last major pivot. So that's cleared. There's no breakout between this pivot right here and the entry level's pivot. So that would be no breakouts at this level right here. So we cleared that. Moreover, this H&S is relatively flat because its angle is about 245. All right, so finally, let's see if the prior trend was in the opposing direction like it should be. We'll zoom all the way out, go all the way back and bring that H&S to the right side of the chart. Now that H&S is right here. Now immediately we could see that there are higher highs to the left side of this chart, which means the prior trend before this H&S was actually down. But in order to have a legitimate H&S, we needed an opposing trend before this H&S pattern. So at this point, we found that this H&S pattern was a fake. Okay, so let's go on to number 2. Okay, number 2. Discover the height target. Now using the distance between the head and the neckline of the H&S, project out a target level. Okay? Okay, so using the pivot high of the head, which is right here, and drawing a straight line right down to the major neckline, we want to project out this same distance from this major neckline, which is roughly in this area, I would say. So the projected target level for this fake H&S is roughly at this price level. Okay, let's go on to number 3. Okay, number 3. Adds consistent strength. So between the projected target price level and the right shoulder's stop loss level, there is consistent added strength in the direction in which the fake H&S propels price. Okay, so this is the right shoulder stop loss level at this pivot high right here. And again, that projected target price level is generally in this area right here. So since this is a fake H&S, from this right shoulder stop loss level right here, all the way to the projected target's price level, there's consistent added strength long to every pivot that we measure the future strength of. Okay, so let's go ahead and do an example of this. So let's say we knew that this H&S was in fact a fake. So we were looking for a long entry. So let's go ahead and measure the future long strength of this pivot right here. Okay, so first we're going to use a trend line. So let me just zoom out here. Okay, so we'll just use this trend line from this pivot to this pivot right here. Then we're going to count the touches on it. So there's 1, 2, 3, and 4. So we'll give this a +5 future long strength for just this trend line at this pivot right here. However, simultaneously, because price is at a level between the right shoulder stop loss level and the H&S's height target price level, which is generally in this area right here, we're going to add another +10 long strength to this pivot right here. So let's go ahead and do that. So +10. So the future long strength of this pivot was actually +15. All right, so one more example. So let's say we were still long biased, so we wanted an entry long, but we missed this first opportunity. So now we're going to measure the future long strength of this pivot, hoping for a long entry. However, due to the angle in which this pivot is placed, there's no way to draw trend lines on this time frame. However, even if there are no elements on this pivot, there is still future long strength in it, of an amount of +10 future long strength. Again, that's because price is still at the price level in between the right shoulder's entry stop loss level and the projected target's price level, which is generally in this area. So even if price has no other price elements to add future long strength to this pivot, just because price is still in between this price level right here and this price level, that automatically adds future long strength of +10 to every pivot, right up to this price level right here, which was reached at this point. And moreover, since this price level was reached, all the price action from that point on will no longer have an added future long strength of +10 from this fake H&S. Alright, so now let's go on to some basic rules that you need to understand in order to gauge the market bias with H&S patterns. Okay, basic paradigms. Higher time frame H&S situations creates more strength than the lower time frames H&S situation. Okay, let's go back to that example. So this fake H&S that we were looking at was a daily fake H&S. However, let's go on to the 4-hour chart to see if on the 4-hour chart this H&S is a fake also. Alright, so on the 4-hour chart, this is that same H&S that we were looking at on the daily chart. Now let's go ahead and see if this 4-hour H&S is legitimate. Alright, so it has parallel necklines because there's an equal distance. The top neckline is adjusted to a pivot between the main neckline and its correlating major pivot, so that's clear too. This H&S is obviously very flat, about 3 o'clock, so that's cleared. Moreover, there's no breakout of the main neckline between this pivot and the right shoulder's entry level, so there's no breakout at this level right here. Now let's go on to see if the prior trend was in the opposing direction. So we'll zoom all the way out and bring that H&S to the right side of the chart. Now this 4-hour H&S, unlike the daily chart's H&S, actually had an opposing trend before the formation of the H&S. So that shows us that this 4-hour H&S was actually legitimate, while at the same time that daily H&S was a fake H&S. Now let me show you what happens in this kind of scenario. So we'll zoom back in. So that right shoulder's entry level is right here, and that stop loss is right at the pivot high. Moreover, the projected target level is right here at this price level. So although this 4-hour legitimate H&S does generate future short strength at each one of these pivots, say let's say +5 future short strength, because the daily H&S was a fake H&S, at each one of these 4-hour pivots, the daily chart is actually generating a future long strength the entire time of +10. So actually each one of these pivots have a future short strength of -5 because we're subtracting the daily's future long strength from this 4-hour future short strength. So each one of these 4-hour pivots actually have a -5 future short strength. Okay, so in this way, if you're using the 4-hour chart as your lowest time frame to trade on, you have to use the higher time frames H&S situation to always know what's happening to a H&S on the higher time frames. So at the very least, if you're using the 4-hour chart to trade as your lowest time frame, then you must use the monthly, weekly, and daily charts also. Okay, let's go on to the rest of that text. So even if you're only trading the lower time frames, you must at least use the monthly, weekly, and daily time frames to always check the higher time frames H&S situation. Moreover, if you use the 1-hour chart to trade, I recommend using the 4-hour chart too. Alright, so if you're using the 1-hour chart, and that same H&S on the 1-hour chart being right here, you're going to need to check the H&S situation on the monthly, weekly, daily, and the 4-hour charts. Because as a basic paradigm, the higher time frames H&S situation will overpower the lower time frames H&S situations. Okay, next slide. Okay, so that was it for this lesson. If you have any questions about this lesson, please leave it in the comments. Now in the next lesson, we're going to go over using double top and bottom patterns to gauge the market bias. So similar to what we did in this lesson, we're going to learn how to use double top and bottom patterns to gauge the market bias using fake and legitimate double top and bottom patterns. Okay, so I hope you guys have a great day, guys, and thanks for watching. Bye.